On Business Incorporated today. The European Investment Bank approves 10.9 billion euros finance to accelerate green transition across the world, including Africa. And the European Union injects 47 million euros in Zimbabwe's health sector. In South Africa's Reserve Bank's Monetary Policy Committee meeting is set to hold this Thursday for the final time this year. Hello and welcome to the program. I'm Will Ibong. Let's get straight to the markets, which is first things first. We're checking on markets in Africa, where intraday sentiment in Africa is mostly negative. We saw the NGX up at 0.35%, while South Africa was down 0.83%. Same in the north of Africa, EGX 30, that's Egypt, is down over 0.5%, while Kenya closed positive on Friday. But to give us more sentiments of what's happening on the NGX and what's driving it, we have Samson Owolabi. He is an research investment analyst at ARM Securities. Good afternoon, Samson. It's good to have you on the program.
Good afternoon, Will. Good to have you once again.
Samson, just give us a bit of a dive here. We saw the NGX close 1.22% up for the week last week. Sentiments at intraday seems looking positive. What do you think is driving this, and how do you think it's going to end for today?
Okay, so thank you for that call. So concerning that, what I can just see is that we can see that some investors are leaning towards some tickers, especially the banking tickers, the big names like Zenith, and we can see that there have been a lot of buying interest around that area. Activities have been going around that area. So those were like the major activities that we are still seeing. And also when we look at Nigerian bureaus, we can see that activities are going on in that place. So those are the major tickers that we're seeing that are really driving the market right now.
And we saw a massive sell-offs in the big names last week. We saw Dangote Cement, Dangote Sugar. We also saw for Lafarge, MTN Nigeria. They were all names that were going down. The bellwether stocks, the behemoths in the market. Are there any interest in those stocks as we speak at intraday? Is there any investors looking at those stocks at the moment, or they're looking at the penny stocks? What's moving the market?
So right now, we are still seeing like around the market now, as I've said earlier, we can just see activities around Nigerian bureaus. These are Access and also Zenith Bank. Those are the major movers there right now. We've not really seen much activities around Dansem at the moment right now. But, as the market is right now, so as it goes ahead, we can see investors come around and look into that space to just see more activities there. But what I'm really looking at right now is that, they still see some sentiments in the market is not really so positive right now. And it's one of the major reasons why you can just see investors are still taking a breather at the moment.
So MPC decision, the central bank is, going to give the outcome of their MPC meeting, which has started today. What do you think will be the outcome? What are your expectations? How would that influence market sentiments, equities?
Okay, so thank you. Now, concerning that, now one thing you note about the MPC is that in the last MPC meeting, one of the factors they noted that they took into consideration was the fact that inflation is still on the rise, and you can see that recently, when you look at inflation figures, it's around 21.09% for the previous month, for last month. And when you look at these are figures that tend to drive the MPC's decision, and they tend to look at this just to find a way to increase the interest rate just to curb inflation. Now, so if we see with inflation still going on, still going higher, and also when you look at the global market, you can still see major central banks around the world are still increasing the interest rate, especially in the United States. And when we look at this, you see that these are still factors that if the MPC consider, they might want to increase interest rate, because the more interest rates are going higher in the especially in the US, you'll see that those tends to bring a lot of might tend to lead to capital outflow for us right here. So the MPC the MPC, our own here, they are also looking at ways to just make sure that our market looks more attractive. So they might see that hike interest rates more. And with what we are seeing right now, we might just be expecting another like rate of 50 to 100 basis points rise in interest rates.
So if we're talking about 300, you're mentioning the 300 basis points interest rate hike for inflation. I mean for the MPC.
I said 50 to 100 basis
100.
points.
Oh, 100. Okay, yes.
I said 50 to 100.
50 to 100 basis points. Okay, correct. 50 to 100 basis points hike. Is that the general sentiment among analysts or experts in the market? Because we're looking at what we're saying is that what we're hearing is that inflation is probably going to be ticking higher. We're looking at 22% probably in the next reading. So do you think that the hiking the interest rate is in the best interest of the market at the moment? If these are these instruments or are these tools working for our market at the moment?
Okay, so one thing I would just to say concerning that is that the major causes of inflation are not what we've seen from the trend recently. It has been that the hike in interest rates have not really been tackling it. But what we are having the CBN do right now is that the hike in interest rate is still like the best tool they can use. It's just like the best instrument they have to just go to this war against inflation. So that is what they are using right now. And when you see what they did recently, the Naira redesign that they are proposing, they are trying to bring out the all the funds that have been outside the banking system back in, so that it's going to like improve the effectiveness of the interest of the monetary policy decision. So all these things are the factors that they are looking at just to like make it work. So in my own case, I will not really say that the interest rate hike is not like entirely wrong or entirely, let's say, ineffective. But I'll just say that it still has its own effects. But the let's say the efficiency and the effectiveness of it is not really that much right now. However, that is still like the best tool they have to just tackle this inflation.
Okay, Owolabi, what are you for the market right now? Are you bullish or bearish? Is the market going to close bullish or bearish today?
Okay, well, with the things that we've seen right
Quick
now,
one.
and
Very
with the current trajectory, I think we might close on bullish.
Okay, we'll look forward to that. Owolabi, Samson Owolabi is an investment research analyst at ARM Securities. Thank you for joining us and sharing your perspectives on the program.
Thank you for having me, Will. Have a nice day.
So we'll move on to sentiments in the Middle East, where it's negative. There's a red bloodbath there at intraday. We saw the Abu Dhabi index down 0.8%. Dubai index not doing, but down more than 0.5%. And Saudi Arabia down over 1% as well. Qatar is the biggest down at intraday. It was down 2.13%. Now we flip over to the EU, Europe, where we're seeing climate talks in Egypt ended on Sunday with a deal that would see a fund created to help many developing countries stricken by climate disaster. But the deal has been criticized for not going far enough. We're going to talk to Janelle Dumelon. She's the DW spokesperson. She's the DW speaker there. She's going to give us insights on what happened over the weekend. Janelle, over the weekend, the climate chief, Frans Timmermans, threatened to walk out of the talks. How was it resolved?
Well, first of all, I think it is important to underline that the deal that was achieved at COP27 over the weekend is, in fact, a historic deal. This is the first time poor countries and rich countries have agreed on a so-called loss and damage fund to help poor countries deal with the climate crisis, which, let's face it, was largely driven by developed nations. But before that deal was agreed, as you said, it cannot be overstated how fragile these talks looked at some point, especially on that Saturday when Frans Timmermans threatened to walk out. The threat of the COP ending without a deal was very much present in the room. Now, EU negotiators said that an early version had stepped back from commitments, that it didn't contain tough enough language in terms of cutting emissions. And as such, that nearly precipitated that walkout that we were talking about from the EU delegation. But fast forward, there is a deal. There were some compromises made around the language of the text. The EU and its allies succeeded in getting the fund to focus on the most vulnerable countries. But there's a sense that perhaps a false dichotomy has been established here, with a clear win of an important historic deal to help the most endangered or vulnerable coming instead of more ambitious emissions cuts, which, when really, for all of us to survive, you need a more robust mix of policy that pushes much harder on both fronts.
So this deal was eventually reached in the end, but the EU is not completely happy. Which sticking points remain, Janelle?
Now, I touched on it briefly, but around the EU, the reaction is that the world's nations have fallen short. I mentioned Frans Timmermans, the EU climate chief, earlier. He said, and this is a quote, "What we have in front of us is not enough of a step forward for people and planet. That much more should have been done, and that the EU was disappointed." This deal mentioned a phase down, for example, of unabated coal power, but did not mention fossil fuels like oil and gas. This, of course, is a source of resistance for the likes of Saudi Arabia and some other major fossil fuel producers. The language around the deal is essentially a holdover from the last COP in Glasgow, COP26. There are certain aspects like newer targets backed by the UK, like having total global emissions peak by 2025. Those, for example, did not make it into the text. So there is this sense that an opportunity was missed to really push forward more stringent emissions cuts for a COP that had sort of set itself up as a forum to implement what had already been agreed upon, as opposed to a mere reiteration of what we already had.
So has there been any market reaction?
Most notably, we've heard from Annalena Baerbock, the foreign minister, who has also expressed her own disappointment that especially the emissions cuts and the phase out of fossil fuels was, quote, blocked by a number of large emitters and oil producers. She acknowledged what was achieved in terms of the Fund for Vulnerable Countries as a breakthrough on climate justice, but cautioned that the window to keep the world on the path to 1.5 degrees is shrinking rapidly. Similar words from Jennifer Morgan, that is Germany's climate secretary, who said that Germany had gone along with the deal because of this fund for the most vulnerable and how necessary that was, and said that the inclusion of the 1.5 degree temperature increase limit was an important signal to show that there was no backsliding. Again, however, this was a lot of effort in order to essentially stay in place, and in Germany, it is still very much being digested what that could mean.
Thanks, Janelle Dumalon, for the updates, sharing your thoughts with us. And now, shares in the Asia Pacific mostly fell on Monday amid growing COVID concerns in China as its central bank kept the benchmark lending rates on hold in line with expectations. The Hang Seng Index in Hong Kong fell 2.02% in its final hour of trade, leading losses in the wider region. In mainland China, the Shanghai Composite fell 0.39% and the Shenzhen Component also fell 0.41%. In Australia, we see the S&P ASX 200 was down 0.17%. South Korea's Kospi dropped 1.02%, and the Nikkei 225 in Japan bucked the regional trend and was up 0.16% at the close of the bell, while the Topix index gained 0.28%. Now, S&P 500 futures in the U.S. fell early on Monday ahead of another batch of retail earnings to kick off a shortened week for the Thanksgiving holiday. Futures tied to the broad market index were lower by 0.35%. Dow Jones Industrial Average futures were lower by 84 points. NASDAQ 100 futures were down 0.3%. The major averages each posted an up day, but a down week in the previous trading session. The Dow rose nearly 200 points. The S&P climbed 0.5%, and the NASDAQ Composite finished just 0.01% above the flat line. Investors have been reflecting on the strength of the recent bear market rally, which kicked off earlier in the month, with the October Consumer Price Index reading and gained some steam with last week's reading on wholesale prices. Next, conversations on tech layoffs that has affected most African economies. That conversation in a corner. Do stay with us. This is Business Incorporated. Welcome back. We'll bump up where we left off with oil prices dropping to trade near 2-month lows early on Monday, having earlier slid by around $1 a barrel as supply fears receded, while concerns over fuel demand from China and U.S. dollar strength weighed on prices. Brent crude futures for January had slipped 74 cents to $86.88 a barrel. U.S. West Texas Intermediate WTI crude futures for December were at $79.40 a barrel, down 68 cents ahead of the contract's expiry later on Monday. The more active January contract last fell 59 cents to $79.52 a barrel. Both benchmarks closed Friday at their lowest since September the 27th, extending losses for a second week, with Brent down 9% and WTI 10% lower. Now, gold prices fell for a fourth straight session today due to a stronger dollar, with the U.S. Federal Reserve's monetary policy stance clouding the outlook for non-yielding bullion. Spot gold was down 0.5% to $1,740.68 per ounce after earlier hitting its lowest level since November the 10th at $1,738.35 per ounce. U.S. gold futures surged 0.7% to $1,742.10. A key driver of the gold price is U.S. real interest rates, and the metal is taking cues from higher nominal rates ahead, as well as a stronger dollar. Side UBS analyst says bullion fell 1.2% last week, its worst since the one ending October the 14th. The dollar rose 0.8%, making greenback price bullion more expensive for overseas buyers. Now move over to Africa, where precisely in South Africa, the South African Reserve Bank Monetary Policy Committee, MPC, is meeting Thursday, November the 24th, for the final time this year, with another rate hike expected. According to Finder's poll of 20 economists and analysts, 90% forecast a rate hike on the way. Half of the experts polled believe the bank will hike rates by 75 basis points, while some expect a 25, 50, or 100 basis points hike. There is no consensus from the panel on when rates will peak, with the projections split across 2023. The experts are more confident of where rates will peak. However, with most settling between 7% and 7.5%, the current repo rate is at 6.5% as we speak. Now, S&P Global Ratings has maintained its positive outlook on South Africa as the agency expects the net external creditor position and the implementation of some structural reforms could lead to an easing of economic pressures. S&P in May upgraded its outlook to positive from stable, citing an improved fiscal trajectory. Higher than expected government revenue has supported the fiscal position this year, but fiscal pressures remain, the ratings agency has said. In the country's midterm budget statement delivered in October, the National Treasury said South Africa's budget deficit would shrink more quickly than before, with debt stabilizing at a lower level. South Africa suffered a sharp economic contraction during the COVID-19 pandemic, but its recovery has been supported in the past 2 years by commodities windfall that has boosted government revenue. Now, green hydrogen is viewed as vital in the world's shift away from fossil fuels, and its production is especially suited to those African countries that are sunnier and less densely populated than other parts of the world. In South Africa, rows of solar panels glinting under the sun are an example of what could be a brighter future for its energy needs. But there are question marks over whether South Africa is ready in terms of its politics and infrastructure to profit from green hydrogen.
The proof of concept facility in Vredendal, around 150 miles north of Cape Town, is producing green hydrogen, a key element of South Africa's energy transition plan to cut carbon emissions. The Vredendal facility has been developed by Caron Energy in a joint venture.
These two electrolyzer sticks, they get the energy from the sun, and then we supply them with pure water, and the process of electrolysis takes place in these two electrolyzer stacks. And when electrolysis happens here, water is split into hydrogen and oxygen.
George van Rensburg, Caron Energy's executive director, says the proof of concept facility only produces small amounts of green hydrogen, but there are plans to upscale production at nearby Varinsdorp to produce green hydrogen for local and international markets.
The commercial plant in Van Reinsdorp will use about 10 megawatts of solar power, solar PV power, to power a 6 to 8 megawatts electrolyzer, and we will produce roughly about 1,000 kilograms of hydrogen per day.
According to a plan presented at the UN Climate Summit in Egypt, South Africa could produce over 5 million tons of green hydrogen.
Now, the European Investment Bank, that's EIB, has approved financing worth 10.9 billion euros to accelerate climate action and clean energy, business investment, health, and sustainable transport investment across the world, including Africa. The announcement came on the sidelines of the UN Climate Change Conference, the COP27 in Egypt, hosted in Sharm el-Sheikh over the past weeks. The EIB is also providing backing for 3 new targeted initiatives to streamline financing for private sector renewable energy, energy efficiency, and energy access projects in Africa through venture debt financing for innovative companies, helping to fast-track sustainable energy use throughout the continent. Now, Zimbabwe's government and the European Union has signed financial agreements amounting to 47 million euros to support the country's health sector and electoral process. According to the Finance and Economic Development Minister, 41 million euros will go towards improving health outcomes, while 6 million euros will be used to support the electoral process. And that's it on Business Incorporated. Do join us tomorrow for a special edition of Business Incorporated. I'm Willie Bong. Bye for now.